Hello, 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 and a massive hello to everybody. Hope everybody's having a great day wherever you may be, whatever you may be doing. This is 50 Pips, rocking and rolling here, 18th of March, 2018. No trade calls, no recommendations, a response for their own stuff. We're here for educational purpose only. So, what's happening? Interesting, busy week. We've got, monetary policy minutes out of Australia. We've got RBNZ, we've got BOE, but really it's all about the FOMC midweek, right? Which will likely determine what way the market's going to go and give us a lot of things to digest. So clearly that's the biggest event risk. Of course, as we have more and more political risk building up in Washington, we always have to watch out for any kind of headlines. So what's happening on equities? I think the most interesting way to look at this here is just to focus on, if you look at the SPX or the NDX, right? So you see what's happening. We're still hovering at these highs with the market not really going anywhere, right? And still hovering at this 50, right? We talked about the importance of the 50, the 100, and the 200 DMA, and we'd be looking at these for follow through, right? Bullish above, bearish below. If you look at this here, where are we stopping? You see we have basically that gap up, which is right in line of that 50, and that's where we are, right? So essentially, market is trying to creep higher. It's still holding at this, around this pivotal, let me mark it up, 2800 level, and we'll have to see how it tackles, how it trades around this 2800 and this 50. But as far as we're concerned, our base case is still that we still have to probe lower. We'll change that base case if we get daily closes above the 2800. So here we're watching. Clearly, as long as it's above the 50, it could still take stabs back up higher. If it trades back below, then we would expect a very quick move back into this 100. But, still hovering, no surprise, gap, big support level here, and that's likely going to be the bull bear line level for the week, or at least as we go into the FOMC, right? And if you move that and you look at the NDX, well, again, no big surprise. You had this previous high where the market gapped up, and we're right at that gap pretty much. So look at those previous highs, remain the bull bear line, bullish above, bearish below, above any new high possible. This was the 123 extension that we had in terms of a new primary target. You got nice reversal just at that level. Below, looking for gap fill, and we'd be looking at that 50 DMA to come into play. Now, clearly with it being a FOMC week, the focus is going to be on the dollar, right? What's going to happen on the dollar. And if you look at the DXY, we're still kind of stuck. And our base case, we discussed this last Sunday, was that we were continue to just be in a wait and see mode, and we'd have to wait for the FOMC to decide which way this was going to ultimately break. We're still in a sideways range, so I wish I could update and talk about something more interesting, but really not a lot's going on in line with our base case expectation that we're still chopping around. Clearly, if we get a bullish reaction on the Fed and we stay bid, the base case is going to be to try and see a move back into 91, into this 100 that's descending. Lower, we're looking for these lows, we're looking for this to move down an extension. I think right here, probably the pain trade, even though it looks like, it would be the healthy move to see a little bit of a correction higher, probably the pain trade is higher, at least in terms of velocity of the move. But again, you could really look at this either way, but we're clearly at a lot of very, very interesting levels. And we discussed how we had that breakdown in USD JPY and Euro JPY. In Euro JPY, you're really getting some decent acceleration. So this is going to be very, very interesting, right? Because if we break back down below here, now that we're holding below the 200, there's clearly not a lot until we move all the way back into these 124 15s. And again, we have to look at what happens on USD JPY, because it's still holding particularly heavy, right? And you see this on the weekly. As long as it holds down, we're still looking for this to try and come back into the 100. Where things have been a lot more interesting, or at least where things are a lot more interesting where we stand right here, right now, are on all those commodity currencies. So you see here on the loonie, we've had a monster rally, right? And this is going to be extremely interesting because if it's going to sell off, right, we'd expect it to start and sell off into these highs here. A lot of resistance pivotal level here, mid-range. So I think probably what most people are going to be looking at is move back down into this area and then hold for the next leg and the rip higher towards those 132s, 135s. Think here the surprise would be clearly if we broke back below and we got a sharp correction. That's probably not the base case most people are working with right here. If you look at the Aussie, again, another one where, and it's going to be interesting because we got those policy meeting minutes out. Another one that's clearly at a very, very big and important level here on the weekly, right? And again with the, it's really on the edge, right? Really on the edge. Because if it can't hold here and we hold the break down, then you could easily have another 200-300 to the downside. If it's going to bounce and try and hold this this upside rotation, this is where it needs to bounce. This is where it needs to bounce quick into the week. So quite interesting level also. If you look at Euro, we're hovering here. So everything is pointing to a little bit more of a correction, even if we're ultimately going to end up higher. So again, I think it's that dollar firming up. And the big question is also how it's going to trade against those commodity currencies, or especially against USD CAD and USD CHF, which have really been very, very strong in the week. But it's really, really tricky to call anything going into a week like this because you've got so much event risk with the FOMC. It's more of a question of going into the week, understanding that the opportunities will likely come towards the mid to back end of the week, and just understanding the zones that are of interest, right? And then being patient. The other thing, which again, we think the most important thing is really on the equity side, because if you look how we closed last week, it's the first time where you start to see some weakness coming in in the tech side. Look at how Apple closed, right? Look at how Amazon closed. So it's going to be very interesting to see if we get a little bit of follow through. And again, as far as we're concerned, these are all on. Oops, I don't know what happened there. These are all on crack, right? So a pullback would be healthy. Sooner or later, we think we'll get a nice move to the downside. Again, most people have been getting slapped on the wrists trying to play for it, but it looks like it could be shaping up to be interesting, right? Because of these weak closes on the weekly going into the FOMC. Are we going to get a surprise? Aren't we going to get a surprise? It should be interesting. In terms of Bitcoin, our base case here hasn't changed. We're still looking for a move lower. We're by no means has it stalled here? Looks like it's not. Let's see if it's not trying to. Okay, here it is. We're by no means Bitcoin haters, and that's why I got the futures on. We are just simply looking at the technicals and looking at the charts, right? So our base case here was that as long as we broke below those 8625s, holding below that 200, the path of least resistance was for more downside. So we continue to look for a move back into these lows to test this whole 6,000, 5,000 zone. At this point, that's probably going to be an interesting point to try and put on some longs. But, it's just right now, it's steadily moving lower. And we'll have to see what happens. If we ever get a very, very ugly day with a flush, we'll definitely be interested in buying, but we're still focused on this zone, and we suspect there should be some nice buying opportunities around that zone, so we're patiently waiting. Crude doing what it does best on a Friday, ripping higher at a particularly interesting level here. If you look at it on the daily, basically we're kind of, stuck here in this triangle, and we're trying to push back towards the top end of this triangle with a 50 DMA here, the 100 and the 200 lower. So our base case was that on the weekly, once we broke back down and we had that negative close back below this big weekly level, we're going to come back and get a move into the 55, even if we're ultimately going to try and correct higher. This looks a little bit under pressure now. This view looks a little bit under pressure. Tricky to say if we just had, wheeling and dealing into OPEX. We had wheeling and dealing on a Friday, but we're not going to change the way we look at this, right? As long as we hold below these 6260s, we expect to see a move back into the 55s. If we trade back above, then we expect this to try and come and take a stab at the 70s. So we're still using this big level as a big bull bear line, but clearly our interest to trade crude here has decreased significantly as it's getting more choppy. I mean, even though you could argue that the action is very, very nice here on the daily in this triangle, and it's setting up for a nice little sell, it's a little bit, it's not as clear. It's a little bit choppier. We probably prefer to look at clearer things, but gun to the head, we'd definitely be looking for shorts, not longs here, but we feel that maybe that might be a little bit too much of a public view right here, right now. So, we won't shy away from pulling the trigger, but we feel there are some more interesting things out there, especially as we're going into the FOMC week. On GC, no big change, still holding heavy on gold. Our base case has been for a long time since we flattened up all those longs into the gap fill to look for short side and to wait for one big ugly flush into the 1300 to then get long for the next rotation higher. So we haven't changed our view there. Does it look like it's trying to base? Sure. Could it base here? Sure. It's just that these kind of look like a little bit too good to be true setups. So we'd prefer to miss some of these too good to be true setups than to get caught offside, because usually when you get those flushes, they can be very, very ugly. So clearly do not want to go into FOMC with any position on, especially not at the start of the week. We'll start to get interested on Tuesday into Wednesday, right? In terms of, what else is out there, that's pretty much it. I wish there was something a lot more interesting to look at. There's just simply not that much going on because we're in the holding pattern. So nothing much has changed to what we've been discussing. But clearly this week has the potential to be very, very interesting. And again, be patient and see what happens. Thank you for listening. Thank you for sharing. Thank you for liking. As all, wishing everybody an awesome week. Thank you so much, and see you around on Twitter. Have an awesome one. Bye-bye, guys.